I turn it off and turn it back on. Ever since I got you, you've been real rolling. What's up? They can't hear you. What's up? What's up? Ever since I got you, you've been real rolling. Man, that song hard, man. You ever heard this song?
I have not ever heard this song.
What's up? They can't hear you. What's up?
I don't like going live this way. What's popping, everyone? How y'all doing? How y'all doing?
What's good, everyone? How y'all living? Your boy David.
Your boy Jalen.
Glad y'all could join us on this lovely Tuesday evening. Waiting on our lady Shaquana to hop on here. Tax Talk Tuesday. Coming in here kicking some good game about these taxes, man. Hopefully can help some of y'all out with your personal situation. Please pardon us. We're still getting everything set up on the back end with YouTube. We're not the most well-versed in this. Third time's the charm.
I mean, we live.
We live?
Yeah. I just don't know what's going on the other side. Just gotta wait on Shaquana.
Yep. I'm gonna hit up right now. But how y'all doing tonight, everybody?
How y'all living?
As always, whenever we kick these things off, we love to let us know where y'all tapping in from. I'm gonna hit up right now. But how y'all doing tonight?
It's the part that I don't like.
I mean, we don't have to look at it right here. I thought we could look at it on the back end.
I know, but I want to read the comments from YouTube.
I thought we see that on the back end.
Nah, that be coming from YouTube.
Hey, that's what we here for, Shay. That's what we here for. Katisa in Georgetown, shout out. We out here in Dallas, Texas.
Yeah, everybody on YouTube, y'all give us a little second. Like we said, we're trying to get our girl on here. Trying to get Shaquana live with us.
It's going to be a lot of game tonight, everybody. So we'll be talking about tax credits, tax deductions. For the business owners out there, we're going to get into some of the forms and deadlines that we need to file. And on the personal side, we're going to just talk a little bit more to help y'all understand taxes altogether, because like it's not understood enough in our community, to say the least. Like, we don't understand taxes. We always just think that it's like, you know, we get these tax refunds and we can spend them however we want, and it's not always the case. Like, we need to understand what this really is whenever we're dealing with this. Like, a lot of us don't even understand. We paying too much in taxes, so that's why we got our lady on here.
Hell yeah. Taxes be killing your pockets.
Yes, indeed. Don't let them.
Hey,
Shaquana.
I need that sweater.
That Brooks Alliance sweater.
Hell yeah.
They too hard out there, man.
I see that. You muted if you was talking to us. Can't hear you.
I was talking to you guys. Hi.
Hey, how
Hey,
you
how you
doing?
doing? Yep. Welcome to the live, Miss Business. How are you
Of
doing?
course. Trying to get my whole sweatshirt in the camera. I don't know.
Yeah, you
Yeah,
got in there
It's not working for
branding at all
me.
times. Yeah.
that thing,
Okay, there we go. I don't know.
that thing hard. What we got to do to get some of them?
I'll send you guys some.
What's up? What's up? But yeah, we glad we could get you on here tonight. It's gonna be good. Got somebody. Our girl Stacey said she got her pen and paper ready. She's ready to learn. Uh,
That's right, Stacy. That's right, Stacy. Now I'm gonna come with something.
always. What up?
How you doing over there in New York? Y'all
It's
still got
snowy and
all of
shit
that
now.
snow and stuff over there?
Mhm. It's a mess. It's a mess here. It's gonna be snowing for like the next week, I believe.
Yeah, we supposed to get some of that coldness down here too. It's supposed to snow like Friday, so I don't know what's going on.
Aren't you guys in Texas?
Yeah,
Yeah,
we
exactly.
y'all can have all that snow stuff. I'm cool on that. I don't like the cold.
I don't want it either. It's not like I'm like battling or I really want it. I'm just here.
Hey,
Yeah.
that's what's up though. You out there still doing the work, getting everything done. That's all that matters.
I
As long as
am.
y'all just gotta wear them big coats. That's it.
I hate it. I hate it. I hate it. It's
I
so
know.
annoying. I'm really a Cali girl at heart. I'm not really I was born and raised in New York and Brooklyn, but my heart is in California where there's good weather, it's sunny.
Year round.
You might have to make that move soon. Never know.
I don't know. I've been trying to make that move for forever. I don't know. And then I just keep building more and more in New York. So it just makes it harder and harder for me to leave. But outside of COVID, I did spend a lot of time in Cali. I was there literally like 3 to 4 months out the year.
Hmm.
So I was able to get my little dose of Cali while still being able to, do what I got to do here.
Yeah, I gotta go back to Cali. Cali was lit. My first time was last year, and I enjoyed it.
Yeah,
Cali's amazing. I love it.
Yeah, I gotta go back.
it's a dope state. I like
But
Texas
yeah,
though. Texas cool, but yeah, we
I've
gonna
been,
let's get
I've
ready
been
to
to Houston. What part of Texas are you guys in?
we in
Dallas.
Dallas.
Oh, okay. I've been to Dallas before. When I went to Dallas, I was actually in corporate. I went there for like a corporate training, and they took me to like this line dancing club. Very interesting. It was
I ain't
very
That
never
sound
heard of
like
interesting.
that
some
one.
like
Everyone
the
had
square
on like
dancing, line
cowboy
dancing.
hats,
Yeah.
and they had on cowboy. I mean, they had on like the shorts with the cowboy boots and the hat. It was very interesting to see.
Yeah, that ain't my type of
Yeah,
party
I
right
ain't
there.
know
I ain't,
about
gonna-
that one.
I ain't that type of dude.
I'm trying to make it to Houston. I'm trying to make it to Houston.
Yeah, it's a lit
Houston
city.
lit. Like, yeah,
We're going out there next
That's
week
where I'm trying to make it to this summer.
Houston lit. Houston the turn up spot.
for sure. But we gonna go ahead and get into it. Shout out to everybody that's tuning in to Tax Talk Tuesday live right now. Once again, thank you to Shaquana, Miss Business, for being here to educate the community.
The best CPA there
The
is.
best CPA in the business. Y'all better stop playing. She gonna be on Fox in the morning.
Yeah.
So
I am gonna be on Fox in the morning.
we appreciate you gracing little old us with your presence. You know how it is. But we gonna come going right into it. So the first question I want to ask for you, Shaquana, is can you just kind of like give an update of what's going on with the tax code in 2021, like any new recent changes that people should be aware of?
Honestly, with the Biden administration, that's kind of what we're all kind of sitting on right now. There aren't any things that have been set in stone or in concrete. There are a lot of changes that he's planning to make just in terms that'll affect business owners in the sense of just kind of expanding that the social security tax window, like where it's usually a cutoff, and he's just thinking about expanding it. He's thinking about getting rid of the qualified deduction. So basically, he's trying to go in and like chop Trump's tax
Mm-hmm.
code up And so Trump did have a qualified business deduction where if you are an LLC or you are an S Corp, any sort of pass-through entity, sole proprietorship, you received an additional 20% business deduction. And he's trying to get rid of that. And the only good thing that I do see in the whole, when I was reading, was on the personal side where a lot of individuals got hit really hard, especially homeowners, was his SALT. He had pretty much imposed a limit on the SALT deduction, which is just for like your real estate, like your taxes. And so what happens in that line item, you are able to deduct your real estate taxes and your state taxes, and all of that can be itemized on the personal side to then further your deduction to try to help you get past the standard deduction. What Trump did was he maxed that out at 10,000. So most people who are making 100,000, they're paying almost 10,000. Well, if you're in New York, where you're paying city and local taxes, you're already almost at 10,000. So now when you try to add your property tax to that, you pretty much so many people were losing. So that first year Trump came in and made those cuts, I had so many therapy sessions with people because they were used to getting so much money back, and now it was cut. Now, it was cut. So we'll see. Honestly, in regards to the 2021 tax laws, everything is kind of still up in the air because Biden is, probably going to come in there and change a lot. So just
So
rely on me. I'll be on all up in the changes.
I know you will. So it seemed like to me with Biden, his whole thing has been kind of with undoing what Trump did. He's trying to make it more equitable for the personal side versus the business side. Like he's trying to tax businesses harder versus
He's
what Trump is doing.
definitely trying to tax businesses harder. So, when Trump was in office, I kept saying this is a beautiful time for business owners and real estate investors. And it was. It was because his tax laws were definitely in favor. There's talks about Biden taking the corporate taxes from 21% up to 28% because Trump did slash it from 35% and took it all the way to 21%. And so Biden, I guess, is trying to meet in the middle and take it back up to 28%. So, there's talks about all those things. Nothing is really set in stone yet. But yeah, Biden is more so, I guess, trying to make it a little bit more even. But I also feel like some of his codes are going to increase in individuals' taxes a little bit. Honestly, they're like making a big fuss of it. It may be like a few percent, but the way they're trying to make the headlines is as though it's like so much. So business
Sensationalized.
owners will be hit harder. The joy of all those deductions are going to start being cut. So more therapy sessions for me.
So you mentioned deductions and you kind of said something about credits as well. Could you kind of explain the difference between what a tax credit is versus what a tax deduction is?
Sure. So like the simple way and how we say it is either above the line or below the line. So what happens is when you are completing your taxes, and actually when I'm walking clients through their taxes, this is something that we do. We walk them through their taxes so they understand exactly why they're getting a refund, if they're getting a refund, and why they owe. Just pretty much breaking down those deductions and those credits. So now, and I want to be very clear, when we're speaking right now about deductions and credits, we are solely speaking about on the personal side. Okay, so when you're doing and completing your individual taxes. So above the line are tax deductions, meaning that that's going to reduce your income. Okay, so if you have $100,000 in income, then you're going to have a deduction, right? Like a standard deduction reduces your income. So, for instance, if you're let's say you're married, filing joint, your standard deduction is $12,400. I mean, $24,000, right? So if you have a standard deduction and you're married, filing joint, and it's $24,000, then guess what happens? Your income then decreases by that $24,000, and then you're taxed on, what was that, 76,000, right? So then you would be taxed based on that 76,000. Now below the line, that's where people, they start getting like the earned income credits and, you know, the tuition credits and things like that. Those are below the line, meaning that that is going to offset your refund, or whatever your tax liability or your refund, dollar for dollar. So that's pretty much the difference. So while a tax deduction is going to pretty much decrease your income, so then your taxes can be calculated. A credit is going to pretty much offset it dollar for dollar. So if you had a $10,000 credit and you owed, let's say $7,000, then guess what? You would only have to pay $3,000 because it's a dollar for dollar match with the tax credit, right? So that's the difference between the two. So, you know, tax credits are always wonderful because, you know, it's dollar for dollar, while the deduction is more of a percentage. So it's just, you know, it's calculated differently.
Got you. So with a tax credit, if you have more credits than you have a balance owed, do you get that money?
Absolutely.
Oh,
That's
that's
the
dope.
beauty of a tax credit. That's why so many people, you know, they're happy when they have children because they get that credit. They get the credit. And so what that means is that, you know, you do get that dollar for dollar if it is a refund as well.
Hmm. Okay. That's interesting. So it wouldn't work the same way with a deduction though. Like deduction, you just capped off to that percentage.
So not capped off to that percentage. So let's just say it's more so of it's reducing your income to then calculate
Mm-hmm.
I got
your taxes. So it's more so like it's not a dollar for dollar. It's going to first decrease
you. Mm-hmm.
your income, which tax deductions do benefit you as well, but it's not as good as tax credits. That's why you get more tax deductions than you do tax credits. But with the tax deduction, it's not a dollar for dollar match. It's more of a percentage, as you said, because it's like the income and then you get your deduction and then your taxes are calculated based on whatever is left.
Hmm. So with these, like you said, there's two different ones. So you have to own certain things or do certain things in order to get one or the other, correct?
You can get both. There's no like one or the other. So like as an example, you know, everyone gets the standard deduction. And that is, you know, given to everyone. Other, you know, deductions, you may have your, what's another above the line deduction? Okay, this is a good one. Contributing to your traditional IRA.
Mm-hmm.
So when you contribute to your IRA, what happens is every year, and you do, which I love about IRAs, and it's kind of being, you can use it as like a tax planning strategy. If you know you get to the end of the year and you owe money, and you know you may decide to say, you know what, instead of paying the IRS that money, I'm going to go ahead and I'm going to take that money and put it in a retirement account. What you can do is you can contribute up to $6,000, and that can be a tax deduction. So in that scenario, you will add, you know, an additional, you know, $6,000 deduction to your, you know, you'll add an additional $6,000 deduction, which will then reduce your income. And then, you know, what's left, you'll have to just the taxes will be calculated off of that.
Okay, so
Dope. Yeah.
I got you. So like a deduction is something that you actually did pay on. So like you actually put that money towards something else.
Mm-hmm.
Yes.
Okay.
Mm-hmm.
But if you're not itemizing, then you just get the standard. So they do have a question. Is a 529 also considered like one of those pre-tax, like an education saving plan? Is that
Yes.
pre-tax
Mm-hmm.
vehicle?
It's also a deduction. Yep.
So there you go, Shay. That's another one right there for you. It's a lot, all these things. There's just tools that we can use.
And you got a book or something on like the tax credits and the deductions, correct?
I do 300 plus tax deductions. Yes, I do. I always get questions. What can I write off? It is geared towards self-employed
Mhm.
individuals and business owners. And the reason why I actually sat down to write the book is because I'm one person that can't keep repeating myself. And the number one question everyone asks me all the time is, what can I write off? What can I write off? And so because of that, I sat down and I wrote 300 plus tax deductions. It's an ebook, so make sure you guys get that. There's so many things in there. and I use it all the time. Like I put flowers in my office, in my house, just because it's a tax deduction.
Hey,
Hey,
game. We gonna put that one down in the show notes. So while we on the topic, you mentioned self-employed individuals. It made me think about your tweet the other day with the tax credits available to those people. So can you
Mhm.
speak some to those credits that are available? You said it's what, like $17,000 worth of credits available?
Yes, so those credits really were released as part of course, COVID relief.
mhm,
And just kind of keep it in mind that, a large part of it has to do with it started out as a credit for businesses that have employees. However, as a lot of the COVID pandemic relief started to unfold, it was definitely a conversation of what about the contractors? What about the self employed individuals? These people, technically, their profit is considered their payroll. So, what are we
mhm,
going to do to help these individuals and the smaller individuals? While, it's very good to help these businesses that
New
have
businesses.
employees, what about the contractors? And so, there was this huge rally, and then they finally started changing some things. And so, pretty much what they did was they implemented the paid and sick family leave. So credit, sorry, it's paid sick family leave credit.
mhm,
So there's two different credits and a couple different, well, actually, kind of, it's two credits, but three different tiers and how you can qualify. So one is relating to you. If
Mhm.
you had to take any, or you were mandated to take any time off due to COVID based on your industry, you qualify for that credit. If you caught COVID, had symptoms of COVID, and you missed and you were unable to, work in your business, you qualify.
mhm,
And if you were like just experiencing symptoms, you didn't actually technically have to have it, but if you were experiencing symptoms, then you qualify. Now, keep in mind, because I like to say this, you have to be operating at a profit in order to get this credit. So a lot of people will say, hey, I wasn't operating at a profit. Do I still qualify? So you don't qualify if you're not operating at a profit. This credit is really to like offset your income, because how they have it worded is it's you get the credit for up to 10 days, right? So this is the first sick leave credit. So you get it up to 10 days. Now it's either going to be $511 per day or 100% of your average daily self-employed income,
mhm.
whichever is the lower, right? So there's the calculation. So basically your max could be that $5,110, right? But again, if your income doesn't put you in a space where, your your average income exceeds that, then guess what? Then, of course, they're going to use the lesser of the two.
If you
All
make it
right. So,
$75 a day, you make it $75 a day.
Came from
right.
this and that.
So,
I was wondering, so like, how do like, so but for somebody that was operating a profit that could do it, how do they claim these tax credits? Do they have to like provide
they got to
documentation
file
of
their
the net
taxes
total?
with me. And I'm going to ask these questions and I'm going to get it done for you. So many people are like, oh my God, I filed my taxes already. And I'm like, well, I could amend them for you. But so yeah, it is important. And I'm glad you said that, because it is very important to file your taxes this year with someone that knows what
Mhm.
they're doing, because there are a lot of tax credits. There's a lot of advantages. There was a lot of money being thrown around, and you want to make sure that everything is being filed for correctly and everything is filed for appropriately. So now is not the time to
You
file
winging
your
it.
taxes with people that do not know what they're doing, is not aware of the tax code. Because someone was like, I use TurboTax and they didn't ask me anything about this. And I'm like, they're
It's
not going
Oh,
to
TurboTax.
ask you anything about this. It's TurboTax, right? They have to they have to streamline it. They can't. And that's why I try to tell everybody, like, when you have businesses and when you have assets, you cannot use TurboTax. You can't use box softwares, right? Because then it's only but so much from a complexity perspective that, it's going to give you.
mhm.
So back to what we were saying in terms of credits. You then have the family sick leave credit. I'm sorry, I have a piece of hair in my face. You have the sick family leave credit. And that credit is pretty much if you've had to take off from your business and you experience, you have because of someone else that experienced symptoms of COVID. Okay, so if your family experienced symptoms of COVID and you had to go ahead and take off, then you are eligible again up to 10 days, but this one is up to $200 or 67% of your average daily self-employed income, right? So it's per day, right? So again, you have to be making a profit in order for these credits to kick in. But if you are making a profit and you are looking for something to reduce your tax liability, this is a great one. Another part of the sick family tax credit is if your child missed school. Okay, so if your child missed school, then you are eligible to claim up to 50 days, right? So about $10,000. However, the school had to be closed. It's not that your kid was working from home. Okay,
I knew America wasn't letting that shit happen.
It's not. Yes, you have your kid. It's not that your kid. Because someone was like, so if my kid was working from home, no, the kid's school was technically not closed because now they're doing all this online schooling, right? So your kid was not at home. So, I mean, your kid was not out of school. So if your child was out of school, you actually had to stop your business in order to care for your child. Then again, you get up to $200 a day or 67% of the average self-employed income. Okay, which is, again, it's a toss-up.
I wonder how they come up with these numbers.
10,000. I know, right? It's like, who sits down and is like, yeah, but it has to be 67% of the daily. And then, you know what I don't like about this as well? I feel like everyone had to quarantine for 14 days. So why are you only giving me money for 10?
But
I don't like that. I don't like that.
It's crazy with it, right? So like they said 14 days, but then
towards the end of the year,
the end of the year, they'd be like, oh, after 10 days, you good to go back. And it's like, yo, you just said it was 14.
14. Yep. And so that's what I first was reading through it a while ago. I was like, but everyone's home for 14 days. So why are they just giving people 10 days? It just didn't make sense to me.
The dang
that's messed up. Because I know for sure the whole year, like all up until the last quarter, that's when that 10-day rule started taking effect. That's trash. They could at least say, 12. We're gonna give you a little. They can meet you in the middle or something.
Meeting in the middle. It's like bare minimum 10. All right, we changed it to 10 after a while. It's probably always been 10. They just been put out there 14. Who knows? But
nobody knows.
Nobody knows what's going on. Like I remember the whole 6 feet thing. It was like, really? COVID. It's a crazy world we're living in. Okay, so Shaquan, I got my next question for you. So for the business owners out there, this was something that you had spoke. I believe you touched on it last time with the 1099s, but I wanted to get like a full scope of like all the forms that business owners would need to file based on like their entity type. If we could get into that, like what do they need to be filing based on like if you're a 2-member LLC or if you're a S corp or a C corp?
Okay. So first I'll talk about tax forms and then we can talk about 1099s.
Okay.
Because what I realize again when I listen to my clients and I watch and I observe to the questions that I'm hearing and where there's a lot of confusion. And so in regards, so I'll definitely get into 1099s. But in regards to the tax forms that are required for people who are single member LLCs, you are required to file your Schedule C. Please do not file your personal taxes without filing your business taxes. Many times I have to file amendments for clients because they went ahead and, you're used to filing your personal taxes. So what they'll do is go out, file their W-2s and all the things that they're used to filing, and then forget. And they're like, oh, hey, yeah, I need to file my taxes and I'm a single member LLC. And it's like, yeah, no, you have to file that together. So your personal and your business has to be filed together if you are a contractor, if you're receiving a 1099, if you're operating as a sole proprietorship, if you are a single member LLC. Okay, if you are a 2+ member LLC, you have to file tax form 1065. When you file tax form 1065, what happens is each member receives what's called a K1. That K1 is very similar to, let's look at it like a W-2. What happens is the income or the loss from the business is reported on the K1 for each partner based on their ownership percentages. So if there's 4 people in BWR, when we file their taxes, let's just say if there was a profit of $100,000, every single person in BWR is going to receive a K1 that has $25,000 on it. Each member of BWR is then going to take, well, I'm the accountant on both sides, but let's just say if it was an accountant on another side, they would take their K1 and make sure that it's included in their personal taxes, right? And so that is super important because, once that 1065 is filed with the IRS, they now know that you have business income from, BWR that needs to go on your personal side. And so that is very important. The same concept applies for an S corporation, but S corporations, you file tax form 1120S. Okay, so you file tax form 1120S. And just to keep in mind, your due date for filing, if you are a partnership 2+ member LLC or an S corporation, is March 15th. Okay, so that is very important. But back to the S Corp, with S corporations, you file tax form 1120S. All of the members are also provided with K1s. And so same concept applies. You'll make sure that all of the members will receive their K1s, and all of the members of the S corporation is reporting that income on their personal side. So that is key. That is very, very, very important. In regards to corporations, if you're a corporation, your tax deadline is April 15th. So your tax deadline is April 15th, and your tax form that you have to file is tax form 1120. And so with the corporations are not pass-through entities, so there are no K1s. You will pay taxes at the business level. I talked about the deadline already, right? Okay. Yeah. So your tax deadline is April 15th, 1120S. You just have to make sure that it's in. Back to, because I didn't talk about the deadlines, just so that we're clear. I'd like to just be very detailed with everything. So if you are a single member LLC or a sole proprietorship or a contractor, freelancer, and you're filing your business taxes with your personal, your due date is still April 15th. Okay, so that is
April 15th or March 15th. If you got a business that is a pass through, March 15th. But if it's not the pass through, April 15th, along with your personal taxes.
So not necessarily. I don't want you to word it like not a pass through, because technically sole proprietorships, single member LLCs are still pass throughs as well. So just if you're filing a multi-member company, an LLC or an S corporation, well, 2+ member LLC or an S corporation, your deadline for filing is March 15th. Keep in mind, for those two entities, if you file your taxes late, the penalty is $195 per month per member. So you all have to make sure that your taxes are filed and they're filed on time. If in the event you're not able to file your taxes on time, you want to make sure that you are putting in for an extension. So you make sure that you file an extension. I can file an extension for you if you're just like, listen, I can't do this, right? Because sometimes as a business owner, it's a lot to file taxes. It's not as easy as just having a W-2, and it's not that easy. And so some people are like, I need additional time, and that's fine. They can definitely have additional time for they can allow themselves an additional 6 months. And so that is extremely important. So now that we got all of those things out of the way, let's talk 1099. Okay, this is important. And a few things that I want to kind of drive home. When you are working with a contractor, meaning that you are paying them cash, check, you are wiring them money, you are pretty much, I'm going to just leave it at that. So if you have those,
Not on payroll.
they're not on payroll and you're not, one other thing. So I just want to say that, and then I'm going to say one other thing because it's so important. So if you're paying them through, from your bank account, right? Meaning that it's like cash or check or wire, you have to make sure that you are issuing these contractors a W-9. A lot of people, especially my people in real estate, get hit really hard because they're paying these contractors all this money and they're paying them under the table or they're paying them, straight cash, and they're never getting a W-9 from them. So I actually did like this really cool reel
Mm-hmm.
on my page where, are you guys proud of me for my reel?
Yeah, I am very proud. I was like,
You know?
she did the damn thing with that one.
I was like, I know they're gonna be so happy I finally did a reel. But when I basically did a reel because I realized that people were very confused in the form types. They were confused in the order in which it needs to happen. So in order to effectively issue a 1099 to a contractor, you first need to have the contractor complete a W-9 form. The contractor completes a W-9 form with either their business name and EIN number or their name and their social, and then they give it back to you. At the end of the year, you then look at how much you've paid your contractor. If it's anything over $600, you are required to file a 1099 for the contractor. Okay, so that's pretty much the steps. So issue W-9, get W-9, issue 1099.
Mm-hmm.
Okay, so that is important. A few misconceptions that I heard a lot during this tax season is, I paid them through PayPal, or they sent me an invoice, or I paid them through credit card, but I still sent them a W-9. You do not. If you pay your contractors through any third-party service company, PayPal, Square, I don't know, Stripe, whatever it is, if you pay them, they send you an invoice and you pay them, let's say digitally, you do not have to issue them a 1099. The responsibility then falls on PayPal. PayPal, for that person, if they have received anything over, if they've received $20,000 or more, PayPal is responsible for issuing that person a 1099K. Okay, so you don't have to worry about issuing them a 1099 because that is no longer your responsibility once you have made payment through a third-party processing company. Okay, so that is important to note. One other thing that was a change this year for 1099s is typically 1099 miscellaneous were issued for contractors as non-compensation income. But what happens now is you have to file 1099 NEC. So if you have any contractors that you are paying, then you are going to file a 1099 NEC. And if you are a contractor, then you would have received the 1099 NEC this year. You would not have received the 1099 miscellaneous. So that is important to know.
The business breakdown. Hey, you be on it, Shaquan. I gotta give it to you with that. So I'm just thinking,
She's
as
like
a business owner,
tax encyclopedia.
real talk. As a business owner, it would be almost more beneficial if you would use one of those third-party platforms to pay out, just so you could kind of reduce your headache.
Yeah, I mean, yes, but then it also depends on who you're working with and what form of payment they, prefer.
Yeah, because not everybody messes with PayPal.
I do not mess with PayPal.
I don't like PayPal either. I ain't gonna lie to you.
They gave me a grant though, so don't put this when if y'all break this down, don't get that, don't get that.
Hey,
but I don't, because PayPal
You gotta
is
like them to
they
take
will
their
snatch
money.
your money. They will snatch your money. They'll hold your money.
that's the thing with me. They hold your money.
Like our whole first year in business, like every month, it was like, oh, you can't take your money. You can't take your money. I'm like, bruh, What the hell? Like, what's going on?
Yeah, I don't like that. They need to figure out a way. I feel like they're really, really good. Like if I have to buy something from someone and they have PayPal, I'll use PayPal
I just was
because
telling
I
him
feel
that.
like, what did you say?
I was just telling him that because one of my
Yeah,
homeboys got scammed off a Cash App. I was like, if you'd have bought it on PayPal, you'd have got your money back.
PayPal don't play. Yeah, PayPal, that's one thing that PayPal is really good. And I guess that's just their business model. They are for the consumer,
Mm-hmm.
right? And so business owners, they're kind of brutal to us. Like they will snatch your money in a heartbeat, you know, but I
Mm-hmm.
guess that's their business model and that's what's been working, serving their customers. So
Yeah,
Some
yeah,
people be lying too, getting them damn chargebacks.
and
I
then
mess
it's
with
so
Stripe. I
difficult
like
to
Stripe.
like fight them on it. It just it's a headache, and I'm like, so I
So
don't really
yeah.
do PayPal too much.
So yeah, if you use PayPal, be legit and give good service
Yeah.
Yeah, because they will do a chargeback and they will not hesitate to snatch that money out of your account.
at all.
So now that we covered business taxes, that's been great and amazing. So for all the people now that's here that's on the personal side, just with the W-2s, I had a couple more questions for you, and that like with a few things that affect that. One of the biggest things I noticed we had questions about was tax withholding. So can you like explain how tax withholding works and what forms they need to like help minimize their tax liability so they're not, giving too much money to the government?
Okay, so they don't technically need any forms. When they are completing a W-4 form, because that is the form that employees will complete in order for them to receive a W-2 at the end of the year, there's no specific documents that they need. When they're completing it, it really is based on a few things. And they did change it for the tax year 2020. They changed the W-4 form, I mean the W-2 form. And what they did was I think a lot of people have multiple jobs now. And so I think the issue when Trump first came in was that they automatically made some adjustments to
Mm-hmm.
people's withholdings based on, where they already were. So people weren't realizing that they were receiving more money throughout the year. And a lot of people, when they filed their taxes, they were mad because they were like, where's my refund? Because, most people are conditioned to feel like the refund is additional money,
Mm-hmm.
which I see that you all tweeted about the other day. And it's like, stop treating a tax refund as though it's extra money. It's really you just giving the IRS an interest-free loan, which
Mm-hmm.
they will never do for you. If
Hell
you
no.
owe them, if you owe them money, they are coming for their money plus interest plus penalties and fees possibly,
Yeah.
right? And
Break it down to
so
know.
when we look at a refund, it's like, oh man, like I'm getting, this refund, and we're excited and we feel like we won, but we didn't win. We didn't win because the reality is that was our money to begin with. They just held it and gave it to us back at the end of the year. So pretty much when you're completing that W-4 form, you really just have to list out. So they have made it, I think, a lot more accurate because now they allow you to list out your, of course, list out all of your children that you have. If you're married, filing joint, you do. I really think it's just a matter of following the instructions.
Mm-hmm.
Most people don't. Most people just kind of put nothing on there and then submit it and then be like, well, how come all of my taxes, how come I'm being taxed so high? And it's like, because you didn't complete it. You didn't put down that you have some children or that you have some additional dependents. And then what they also did was if you have a second job, what they're doing, because a lot of people were getting hit really hard because they would have two jobs and one job was paying significantly less. So when they were being taxed, they were at one bracket. But when they combined their incomes at the end of the year, they were at a whole different tax bracket because now they're combining the total of both incomes, which most likely is going to push them in a higher tax bracket. So when they push them in a higher tax bracket, now you have people owing. So now what they did is that if you have two jobs, you'll notate on there, okay, well, I have two jobs, and then they will take the correct tax rate out of that second job so that now at the end of the year, it's not a situation where you owe. So Honestly, the W-4 form, what I've realized is that people, when they see tax documents, they don't comprehend.
Shut
They don't
down.
want to see it. They don't want to read it. You don't understand how many times I get notices. And now in my office, I'm like, they'll be like, oh my God, I'm getting audited. And it's like, no, you're not. They're just saying that they waived the penalty that we got them to waive. That's it.
They just didn't read it.
They don't read it. People do not like tax documents. Like they do not. As soon as they see it, they instantly panic. It does not fail. They don't read it. It's one of those things where I've noticed that people don't read tax documents. They don't want anything to do with it. But that's fine. That's why I'm here.
I was just thinking, I was like, oh, they got people like you.
I ain't gonna lie. Every time
I look
get
at the
notified,
notices, I'm like, yeah, okay. My client came to my office the other day. He was getting like all these threatening letters from the IRS, and then he came to my office the other day, and he's like, they sent me these letters. I'm like, okay. So I'm looking at them, reading them, and it's from like back in the day. And I call them, and I'm like, yeah, well, can we just get this abated? And I'm just talking to her, like talking my talk, and she's like, oh yeah, like just send me a letter, like just fax it over. I was like, okay. He was like, you are ready to go. Something like that.
You lucky I'm not in New York, because I'd be at your office too.
Hey, the IRS, man, when they send a letter, I get nervous too.
Yeah,
I'll be like,
like,
man,
man.
Here they go. They want some money, but oftentimes it's really not that, like you said.
It's really not. Like, and one thing I want to note to everyone is that the IRS, the state is crazy. The state gets crazier than the IRS. But what I do want people to understand, especially if you have a tax liability, you want to just make sure that you are communicating with the IRS. They don't start garnishing you and doing all those things, putting levies on your accounts and all those things until it's a situation where you're ignoring them. They're sending you notices, and you're not paying them, and then they will start garnishing you.
Dang.
Okay.
So pay attention.
Yeah.
Because you don't want your wages garnished. That
Submit
sounds
this
terrible.
stuff on time.
Getting your wages garnished sounds like the worst shit in the world. Like,
Yeah. Like I'm going
Could
to
you
work.
imagine the first time you see it and you think your check gonna be one thing and then they garnish it?
Man, I'll be hurt. I feel like that's that child support.
Yeah, bro. I had a coworker back in college. He had got a check after he got his wages garnished for not paying child support. He was like working for like nothing. Like he was getting paid nothing. It's insane.
Yeah, it's so crazy. It's crazy. Yes, people, take care of your taxes.
Take care of your taxes. So Shaquana, you mentioned in there about married filing jointly and single and all that. So I kind of want to ask, like with married couples, anybody, like with your filing status, can you use that strategically? Like, is there a strategic way that like couples can do this to maybe lower their tax bill or like something like that?
So when it comes to, yeah, they can. So one thing I want to note to a lot of people is you are penalized if you are married and you file separate. It is an option, yes, but you are penalized. As an example, if you file married filing separate, there are some child credits that you aren't able to receive. If you file married filing separate, you are not able to recognize a loss relating to real estate, right? So that is important to note. And so you are pretty much penalized. It's as though you're filing single, but with more restrictions. So I definitely, but some people have to file. Some people's spouses be wowing. And I get
what you mean? Like what they be doing? Like what
they be going exempt the whole year. And most of the time I realize it's the husband. Like the guys be wowing.
What you mean?
And y'all be going crazy. They'll go exempt the whole year. And then the wife is like, I don't want anything to do with that. I'm going to file my taxes separately. I'm not filing with him. And so, because they know that him filing, exempt for the entire year is going to eat up their entire refund. And so they don't want that. They want their refund. Yeah, nobody's dealing with that.
So y'all don't be exempting out here either.
Don't exempt unless you need to. Like, what's the advantages of exempting yourself from taxes?
That is not legal. You are not supposed to do that. But I'm gonna tell you what people do. Yeah, you are not supposed to do that. So what people do is they go through, like, do you think it's legal to go and put that you got 99 dependents and you really don't got 99
Oh, hell
dependents?
I know a
no.
bunch of people that did that though. They put all kind of people children on their taxes.
Yes. So they'll put, oh, they have 99 dependents so that no taxes at all is being taken out. But, what happens and what I've seen happen a lot of times is if some people will get caught and the IRS will contact the person's job and then they'll never be able to adjust their exemptions again. Like the job and the IRS will come together, put an exemption in place, and then you'll never be able to change it again.
Damn.
So you
Damn,
have to be
like
careful with
forever,
that.
ever? Like it ain't no
Never
time
ever,
period?
never ever. Not
Sheesh.
when you're with that job, at least.
I was
Maybe
saying,
to
maybe
another job.
change jobs.
But if they get wind of it, they probably hey, stop them. Maybe think about a little meme I had seen. Somebody say, I just filed my own taxes. I should be in jail by Friday.
Oh yes, I've seen that one.
It should have me weak. But yeah, this has been very insightful. Definitely with the exemptions. I never really I seen tax exemptions was an option. I never took advantage of any exemptions because I felt like I wasn't exempt from nothing. But it's crazy to think people would do that.
Mm-hmm. And I kind of want to get into, because I know we talked about like being a business owner, and you kind of alluded to the real estate, like how people get taxed because they don't do certain things in real estate. So like, what does it look like to be taxed as an investor? Maybe like a stock investor. Like I know last year, like the stock market's crazy. A lot of people started getting into investing, and they might not know that how they're going to be taxed on some of these gains.
So there is a separate capital gain. So you have different buckets of income. You have earned income, then you have investment income, which that's where you're looking at your capital gains and losses. And then you have your passive income, your passive invested income, your active invested income. All of those things are taxed differently. So when you have your capital gains on, you're selling stock and, your Tesla done went up 9,000,000%, right? And now you sold and you're like, listen, I'm going to take my money out. What happens is you have to pay taxes on the gain. So a gain is calculated based on your purchase price, right? And then less whatever it is that you sold it for. So if you purchased Tesla for $500, but then you sold it for $1,000, then that means that you have a $500 gain, and you're going to be taxed on that gain. Based on capital gains taxes, pretty much range from 10, 15, or 20%, based on based on your filing status, meaning if you're filing single, head of household, married filing joint, married filing separate, and it also depends on how much of the capital gain. Right? That's also important. Like if you're a married filing joint and you have capital gains of like 40,000 or less, your capital gain is like zero. Right? So like this one guy got married, so he didn't have to pay capital gains tax. I was like, wow, that's interesting.
Wow.
That's interesting.
I didn't know that though. Like that if you get married and
Yeah.
It doubles the whenever you get married, it basically doubles what you have from single, right?
Your deduction, yes.
So you mentioned head of household as well. I always noticed that. What are like the particulars around filing as head of household? Is there any advantages to that?
Yes, I'm glad you asked that because so many people will say to me, well, I live alone. So yes, I pay all my bills in my house. I'm head of this household. No. So if you have in order for you to be considered head of household, you have to have a dependent. And so you can't just say like, oh yeah, I pay all the bills in here so that I'm considered head of household. You do need to have a dependent, whether it's a child or a parent or uncle or someone that you're taking care of.
Can a pet be a dependent?
No, they tried it.
Hey, some people be like, hey, my dog is my child. I just wanted to.
That's what so many people do. So many people do that. They'll be like, my dog is my child. It was like a big thing. I'm surprised they didn't get that passed, but they weren't.
I ain't gonna lie though, like them dogs be costing you some money though. Like this, it's not, that is a child.
It is.
I'm not gonna
But
speak. I'm from the we never spent that much money on dogs. I ain't gonna lie.
I'm
We just
just
bought
saying,
dog
man.
I'm
food.
When
not
you
a
think
dog
about,
person at all.
I love my dog.
I'm not a dog person.
Oh.
My brother just got a dog and he's like, "You're gonna want one." I'm like, "Yeah, I'm never gonna want a dog. I promise you, I'm never gonna want a dog."
Dogs are
I'm just,
amazing though.
I don't, okay, so when I was younger, a dog like chased me and like jumped on me. It was like a pit bull. And so I don't mess with
Nah,
dogs,
they traumatized. Understandable.
So I'm like, I'm afraid of them. And the little ones are just so rowdy. They just be all over the place. So it's too
I
much.
don't like it.
They are like the most aggressive ones. They have
Ain't gonna
no
do shit though.
chill. Hmm?
They ain't gonna do shit though. They just be barking and carrying on. I
Yeah,
can't
but my
stand a little
nerves
dog.
can't take that. My nerves cannot take that. I'm like, what's going on here? I can't do it. They be too aggressive. So yeah, I'm scared of
That's hilarious. That's hilarious.
So I did have a couple more questions with taxes. So with the stimulus check, I know people ask about that often too. Will the stimulus check affect their taxable income? Like how do you file your stimulus check income with taxes?
Okay, so stimulus is not an income. So
Mhm.
your stimulus check is really a pre-advanced tax credit. So again, we talked about tax credits versus
Hmm.
tax deductions. So everyone was going to, for 2020, everyone was going to receive those tax credits when they filed their taxes. What they did was they gave it to you in advance. So that's another really good thing because when filing your taxes, if you did not receive your stimulus, you still have an opportunity to receive your stimulus. Okay, because technically it was a tax credit. So if you didn't receive it already, you can receive it when you file your taxes. Again, number 5,000, why you do not need to file your taxes with someone this year that does not know what they're
Hmm. You, if you want that stimmy,
You need that
Yeah. So
stimulus
you
check.
still can get your stimulus. And I have a lot of people who are like, I didn't get it. It didn't, I didn't know. I don't know how these people don't know, but you'll be surprised. Like, oh, I didn't know. But yeah, you still can get it. It really was just a tax credit. And so I'm happy that you asked that. It's not income, it's not taxable. It is a tax credit and something that everyone would have received in a form of a refund anyway.
Mm.
okay. Well,
And
that's good to know.
yes, and
So
um,
that would only be for how much was it last year? Like $600? What was it?
they they
1,200?
The
did like
last one was
1,200.
600, and then you also receive, for those people that have dependents, they receive $600 for each dependent.
Okay. Okay.
And didn't they do? They did like a $1,200 one
I
earlier
think in
in
March or something
Yeah,
like that. So the
that was the
1,200 and the
first one.
600, are those two going to go on
2020.
2020?
Yes.
Okay.
Mhm.
Okay.
And last one. You mentioned it before too. Unemployment. How is unemployment income? Because like what it was at the peak of the pandemic, 40 million people out of work.
People, there was a lot of people out of work, and people was getting a lot of money. Some
Hmm.
people was getting a lot of money. I mean, if you lost your job and you had to downgrade, definitely felt sorry. But there were a lot of people that were like,
They came up.
they came up. They're like, I'm never going back to work. I'm making $4,400 a month sitting home doing nothing. They was not trying to go back to work. They were like, yeah, I'm here.
I know some
I'm
people
here.
that quit their
Was it
job to get the
4,400? No,
unemployment.
no, no. It was 48, right? Because they got, well, I guess every state is different, but here in New
Mhm.
York, I think the maximum, yeah, it was 44 because the maximum you can get here, I think is like 500 and something dollars per week. And then they were adding the additional $600 on top of that. So they
Mm.
were getting like 1,100, a little over $1,100 a week. So people were eating. They they
Dang.
were they were it was a
Like I
good
said, I know
summer.
some people who quit their job just to get unemployment. I was like, why would you do this?
Listen, it was planning. It was income planning.
Hey, I see.
Yes,
So
so unemployment, we want to discuss pretty much taxable, how do you file it?
mhm.
Okay, so with unemployment, you definitely want to make sure that you are not filing your your taxes without filing your unemployment form. So I lost them. Where did you guys go? So
our
for
camera
your,
just cut out.
okay, so for your unemployment form, you want to make sure. you want to make sure that you're not filing your taxes without filing your unemployment form. Okay, so that unemployment form is 1099-G, and you want to make sure that you include it because the IRS will contact you to say, hey, we have on file that you were issued a 1099-G and you did not include it in your taxes. Here's the amount that you owe. Here's the penalties. And they're not going to contact you for years later with those penalties. So, you definitely want to make sure that it's a situation where you are filing that. Unemployment income is considered income and it is taxable. So what that means is, you want to make sure that you are including that in your income. I hope that you had them taking taxes out, but I know people and most people were not having them take taxes
They want
out.
that
So it's two kinds
444.
of people. Well, first kind is not going to play with the IRS because they already been down the road or have some sort of encounter with the IRS and they don't want that trouble. They know what it's like. Then you have the other people who never experienced that. And they're like, no, I'm going to just deal with it when tax time comes. So like now for me, a part of my onboarding question is, did you have unemployment? I need to know. I need to know upfront what's happening because, that's super important because I need to know, sometimes I have to have therapy sessions. When people, I got to have therapy sessions with them. Nobody wants to hear that they owe.
That's a hard pill to swallow.
It
But
is.
once again,
Like, you mean I've been paying taxes all year and I still owe these mother? Like,
that's why you said though, this is not the year to be going out here and messing with people who don't know what they're doing.
Absolutely.
Don't get messed up in these streets playing around with people that don't know anything, man.
so I see my girl Shay. She asked earlier, how can I schedule an appointment to have my taxes reviewed?
Okay, so I don't review taxes unless you are going to come on as a client. So like I get that question a lot where people they'll like file their taxes and they'll be like, oh, well, how much are you going to charge me to review them? I'm not going to charge them. I'm not going to charge you. I'm not going to do that. If you wanted to file your taxes with me, then I actually have an information session every Thursday. And you all can find the link to that on my website, missbusiness101.com. And there's a link for you to sign up for the informational session. In that informational session, I pretty much go into what it's like filing with me, my fees, what my processes are, and, the whole thing so that you understand, what it's like filing with my firm, Brooks Alliance. And so that is, you can send an email, you can call the office. We're going to get you in there. We're going to make sure. My office phone, just when you would come to my office, it's crazy in there.
I can believe it.
The phones is like crazy.
I love your office. I love whenever
Yeah,
you
because
take
I be
pictures
calling up there, me.
all the when I see pictures of you and your staff, I just be so proud. I be like, look at all this black excellence in this staff.
Thank you. Oh my God, that reminds me. I have to post a picture today. So today is my 3-year freedom anniversary. I quit corporate 3 years ago. So today marks my freedom anniversary.
Turn up. We love to hear it.
3 years.
Freedom anniversary. I like that.
Yeah, I like the
My
way
freedom
you named it.
anniversary. And I did a photo shoot, so I'm going to post it. Actually, right after this, you guys reminded me. Because, yeah, it's so crazy. I have 13 employees. It's crazy.
How does it feel to have that many people you managing?
It's great. It feels really good. It feels really good because I have a lot of clients. We have like over 1,000 clients. And that was last year. So I know this year it's gonna,
crazy.
Yeah, it's gonna go even crazier. So it's good to have them. I love them. My team is like on point. Like I don't think I could have sat back and crafted a better team. So it's amazing to have them. And it's also, I don't know, having a business and being responsible for salaries and things like that is scary.
It is.
Right? It's very scary because people are depending on you.
Mm-hmm.
But what can you do? I mean, they are depending on me, and so it's scary in one breath. But at the end of the day, I
It's
gotta
scary and it's motivating at the same time.
At the same time, I'm just like, I gotta go hard. Like today, this is my schedule. I literally have been on calls from 12:30 to 6. I had to do some taxes from 6 to like 6:45. Then I just jumped on here. And then after that, this is gonna conclude my day. And I've been up since like 7, like at it. So these
Hey,
are the things they don't talk about.
The hardest woman working in the
I'm
business.
telling you, the first time we talked to her, she was in the office.
Hell
Every
yeah.
time we talked to her, she grinded. Y'all better stop playing with my CPA, man.
I be trying to get to it. I be trying to get to it. I'm like, so these people, it's so much pressure too, because I'm always like, people need to know this information. I have to be on top of it, because there's a lot, especially on social media. I actually did a webinar last night with Nicole from ADP. And, we went into a lot of things that, of course, doesn't make headlines across social media. And I was just, explaining like, it's important for you to live beyond the headlines and really,
Mm-hmm.
really understand what it means to have a business, what, options are available for you. That's really, really important. So,
Mm.
I'm glad you mentioned that too. I just thought, and this is something I should have mentioned a long time ago. That I seen you posted it on your story. That employee retention tax credit. That'll be my last thing I ask you. Can you explain what that is?
okay, so employee retention tax credit originally started as a tax credit where if you got PPP and you couldn't apply for the tax credit as well. The employee retention tax credit. So with the employee retention tax credit, before you had to show a 50% loss, but you could receive up to $10,000 per employee for that year. They've now revamped the employee retention credit. And now what happens is that you can qualify up to 10,000 per quarter per employee, which Nicole and I kind of did the calculation yesterday. And it's pretty much you can receive up to about 50,000 per employee because they've expanded it from March 2020 to July 2021. So that pretty much spans about 5 quarters. So you are able to, take advantage of that. And so that's one of the, tax credits that is not really talked about. And of course, before it was like really, really bad. But, for those people that have employees, it's definitely something that can be explored. There is a form that they are still working on. So that, can be done. And then, as I mentioned, I work with ADP. So there, anyone who has ADP, we're pretty much going to be working with them to kind of make sure that they get those tax credits. So
That's just damn near a tax-free employee. If you got
Hell yeah.
50,000.
I was on that live last night because Nicole pretty much breaks it down because it's more of a payroll thing, and I'm just like, Nicole, yeah, we have to evaluate this for me. I need to see what's going on. But there is some stipulations. I believe it's either 67 or 76%. If if PPP covered that amount, then you wouldn't be able to qualify. So there are stipulations and things, but again, you have to have the conversation and be able to have someone that you can have the conversation with to see if this is a credit that you can qualify for.
Like I like that what you
There's like
said.
so much free money out here. Like I need everything. There's like a $500 credit for putting together in your company like retirement accounts. I told them, I was like, I need the paperwork for that. I need my $500 because I just gave my employees a 401k. So I'm like, yeah, I need that. I want everything. I want everything. People don't realize, and they also have like a social security, like an employer tax deferral where you don't have to pay the taxes until 50% will be due December 31st, 2021, and the remaining 50% will be due December 31st, 2022. And so things like that are really important, especially when you have employees, because you could take that money and do something else with it if you needed to. Some people are like, okay, I don't need to, I'd rather just pay it, that's fine. But if you needed to, be able to take that money, do something with it, invest it, flip it, do whatever, you need to do. It's a way for you to, basically have more cash on hand so that you can either then grow your business or invest or do whatever it is that you need to do.
The more you know, the more you save.
Like she said, live past them headlines. You gotta
Yeah,
read.
yeah.
You gotta read between the lines.
Mhm.
And get on webinars like this because they gonna explain it.
Yes.
Well, Shaquana, I want to say thank you
Yeah.
again. This has been
Always learning.
always insightful. I know I'm gonna have to go back and watch this one again just to absorb everything. I hope everybody that tuned in has enjoyed this and has learned something, especially with their situation to affect them. For anybody that's looking to follow you or learn more about how they can work with you, Shaquana, can you just plug your information in again?
Sure. So my Works Alliance is my tax and accounting company. You can feel free to give the office a call. The number is 347-374-3956. My website, I am going to send you guys over to my Miss Business 101 website because everything is there. So my website is www.missbusiness101.com. There, if you send me a DM, the email is there. Everything is pretty much on there as well as the office number. And so my Instagram and across all platforms is Miss Business 101.
We love to hear it.
Once again, thank you. This has been amazing.
You are
Everybody,
more than welcome. Thank you for having me.
No problem, man. We know you probably got more stuff to do. So
Just eat. That's it. Nothing else to do. Nothing else for the
like
night.
nothing major, just survive
Nothing
and
major. Just
exist.
eat. I didn't do that since I don't think I ate today. Oh my God.
See,
I didn't eat
you,
today.
you,
I
you
have like
need to
some
do that.
snacks, but I didn't eat. That's sad. That's sad.
you get you some dinner, man.
Yeah,
You need to get that in your body because you got to talk in the morning on the news. Can't
I
forget about
do.
that.
I do have to talk tomorrow on the news, and so I need to, get it together. All right. So thank you
yes,
guys so
ma'am.
much for having me.
No
We will
problem.
definitely do this again at some point
Next month. We'll see you next
next
month.
month. Yes, next month. I'll see you guys. So yeah, if you
All
guys
right.
have questions, tell BWR and we'll talk about them.
Yeah, y'all
Yes.
submit that. But until then,
This
we'll
has
see
been
y'all.
Tax Talk Tuesday with BWR and Miss Business. All
Yeah.
right, y'all.
Peace.
Peace.
Stop recording this. Okay.